Hello and welcome to the weekend video. This is Enda here from bullwaves.org, obviously. It is Good Friday and I'm going to do the weekend video. And I hadn't realized that because it's Good Friday, there is no trading today. So the weekend video will be all there is today. I don't think there's no point in doing any update tonight when there will be nothing to update on. Quite simply. But anyway, we'll run through on the video what has happened and what I think may happen next week. We'll just have to wait and see on that front. But anyway, let's get going, and I'll start on the FX markets as usual. Okay, this is euro dollar, and I am looking at a larger wave 2 scenario here. I had thought that this previous high here was wave 2, but well, seen as that was the 62% retracement more or less. Plus the fact that the action off that high was pretty impulsive looking, but we've had this kind of rebound yesterday, Wednesday, and Thursday. And I think it may have gone far enough to, to bring the previous wave 2 high into doubt. Okay. Anyway, let's get into the short-term count here. Well, obviously, I'm looking for a 1-2 scenario here, and then a decline into a third wave. So here we go. Is the short-term count? No. Yes. So I've updated this to the new count today, yesterday, last night. This low here at 109.26, that was the previous wave 1 low. So I was looking for any correction in a possible fourth wave to hold below that wave 1 low, and we got a break of that. So it does suggest that there's something different going on here. And the main alternate count is this idea of a larger second wave. So I will be watching for the completion of the 3-wave pattern up into wave 2 by the end of next week. So yeah, it may even happen by Wednesday, given what has happened so far. So it looks like that we're into wave 3 up here, so it should be a 5-wave move in wave C of 2, and it looks like we're already rising in wave 3. So I would expect this wave 3 to hold above 108.30 for the moment. That's the low of wave 2, and push probably back up towards. Well, you would say this B wave high here would introduce a kind of a nice initial target. So 110.38 is where that lies, but you might expect 110.50 maybe as wave 3 unfolds. So for next week, it'll be watching for a 5-wave pattern up into wave 2. Up in wave C to complete wave 2. Okay, now here we are in cable. Obviously, the move off the low in cable is concerning, yet not totally, let's say, against the grain just yet. I can still count this as a 3-wave correction higher. I know that's kind of it's a little bit tenuous at the moment, but to be honest, I don't see a viable alternative at the moment. So I'm working on that, but until something comes and completely blindsides me, we'll just have to wait and see on that. So a 4th wave correction possibly, with a return lower into wave 5, which would be wave 5 of 3, and that should push us well down towards the 110 area. I think if this plays out the way I think it will. Okay, let's get into the short-term count. We had a target this week of 124.86. Yeah, we're just about there. We may have just hit that last hour in the overnight trade there, 124.86. Yeah. So, technically you could say that this is done. 124.83, so it's 3 pips off. Wave 5 would, in theory, we should break that wave 3 high to complete wave 5 of C of 4, and if that, well, a clear break of that would clear up this confusion, short-term confusion, and it would allow for us to look lower again in wave 1. And I think a break of that previous fourth wave there of 121.67, or sorry, 61, will indicate that wave 1 of 5 has begun. All right. So that's the outlook for next week. Possible turn lower into wave 1 of 5. Okay. This against the dollar yen. For the moment, we're looking okay. Possible 3-wave decline in either wave A of E or 3-wave decline in wave C itself. I'm kind of 50-50 on that. I'll get into the short-term count. So we have this D wave high and E wave low coming, and that is, I'm looking for that to complete a larger B wave triangle. Okay, and that low should be in around the 104, 105 area. Okay, so here we are. We're looking at that 3-wave pattern now, down in wave E. So it's, you can take this at either degree here. So I have the alternate count showing 1 higher degree move, and that's just as likely. In fact, it may even be more likely now. But in the short term, the pattern of this wave B high here is, well, it's a little bit less than ideal, let's say, for the moment. I mean, we could have a 1-2 pattern here. It's tenuous, but it could be a leading diagonal or like a wedge pattern in wave 1, and then a 3-wave pattern up in wave 2. If you open that out a bit there, you'll see it. 5 waves move lower in wave 1, 3 waves up in wave 2. So we could be working on wave 1 of 3 to the downside now. If that's the case, then next week should be a continuation lower. The minimum target for wave C would be, let's say, a break of that 106.90 level there. But I would expect and most likely prefer a decline down into this lower trend line there, trend channel line. So that'd be about 104 for that to happen. Anyway, that is the outlook for dollar yen. Possible completing B wave and wave C getting underway, and a decline down to about the 104 area complete. Okay, stock market. We were looking for a rally in wave C, and we got a rally in wave C. Boy, did we get a rally in wave C. Clear up this chart here. And we have hit the initial target area. So the 50% retracement, I can show you here. So here we have 50% retracement coming in at, well, let's say 23,800 or so. And we are sitting at 23,800 or 23,780 at the close. We're there. It's the price did, pip above the initial target area. That isn't to say that we won't see a further rally. I mean, it's very likely, or it's very possible. I mean, if not likely, but it's very possible that we push back up into the 62% retracement area. That'll be 25,100. When wave A down was completing, we were looking for a pretty significant rip-roaring rally back up towards that 24,000 level, and here we are. It's occurred in 3 waves as we were looking for it to, or it's traced out 3 waves as along with what we were looking for. This wave C here seems to have broken out into 5 waves, which is what you would expect. So, and we are sitting at a significant Fibonacci retracement level. So, all in all, it's time to look the other way again. It's not time to start getting bullish. It's time to start thinking about how horrific the next decline is going to be in wave C. And once wave C does get going, whether it starts next week or the week after, I think it is going to be pretty horrific. You can see that even if you just draw this rudimentary kind of trend channel, you would expect a wave C to come down and challenge that lower end of that trend channel there. So that would be, possibly 13,000 area. And that's a long way down. That's another 10,000 point decline. And I would say that's probably, that could even be a little bit conservative. If we got a decline in wave C, which had a Fibonacci relationship with wave B, first of all, you can see that. Let's throw some figures on that. If we had wave C reach 100% of wave A, then we would hit 12,878. If wave C hits 162% or 161% of wave A, then we're looking at 5,000. So, Pandora's box may well be open, and the downside may well be pretty horrific. Okay. Okay, so here is the hourly count that I'm working with, and you can see I've broken out the C wave here, which we've been working on all week. We had a very sharp and reasonably impulsive looking decline here early in the week, and I had thought that maybe the high was in for wave C. Obviously that's been proven wrong now, but we're faltering around that 50% retracement level again. But I've had to rethink that, obviously, as you know. The decline here in wave 4 was quite sharp. It was steep, but I suppose you could pull out those bars there and maybe make a 3-wave correction, or you definitely make a 3-wave correction out of it. But the rally off that wave 4 low is a pretty impulsive looking affair. You've got wave 1 up, wave 2, possible, or nice acceleration in wave 3, then an expanded flat wave 4, and then this spike higher in wave 5 on Friday. And we pushed above that 50% retracement level. So here we are again, 3 waves complete. Although wave C hasn't reached, well, I don't think it has anyway. No, it hasn't reached 100% of wave A. So like I said, there may be some upside left, but I think we're pretty much on borrowed time right now in terms of wave C. So next week I am looking pretty firmly lower again to begin the larger degree wave C decline. And I think we will probably see a pretty fairly rapid initial decline into wave C. So that would be wave 1 in blue. So it would be hard to know. It's impossible to know right now how this is going to play out in terms of the internal action. But I think wave 1 of 1 should probably come below this previous 4th wave here anyway. So we're looking at somewhere around 22,300 for wave 1 of 1, and then a corrective lower high in wave 2, and then an acceleration down in wave 3 of 1. Wave 3 of 1 should break us below the previous B wave here, so that'll be down below 2,500 again. So that's kind of where we stand right now in terms of the pattern going forward. It looks like we've got 3 waves up complete. It looks like wave B is closing out. This large B wave is closing out, and it looks like the next move down should begin pretty soon. If not next week, well, I'm reasonably confident it should begin next week. Wave C down should begin next week, but once it does get started, it'll be a pretty rapid affair, or a rapid acceleration lower. But we'll probably have to work on an initial lower high in wave 1 and 2 as shown here. Okay, so next week key level, initial level is about that 22,300 level at this previous fourth wave. We got that previous A wave high there as well at 22,600. So there's a kind of a band of support there that if we break in an impulsive way, that would point to the market turning again. Okay, and when this wave C down does get going, it's going to be a rip roar. So that's what I'm trying to prepare for myself. So anyway, let's move on. This is next week outlook. Stock market, it's looking to be if not a solid down week, well then the beginning of a solid down move in wave 1 of C. Okay, let's get into gold. Here's the gold 4-hour chart. I had always contemplated this decline as a corrective decline, this recent, even though it was a sharp decline, I contemplated it as a corrective decline in either wave 4 or wave 2 now. So I was looking for a rally in wave 5 or a rally in wave 1 of 3. So depending on which way you slice it, that's exactly what we've got. We've got an impulsive move up. It looks to be in 5 waves. But I think we are drawing close to the end of this, at least this initial phase of the bull market. So this would be wave 5, and if we get out to the daily chart, this would be wave 5 of 3. So here we are coming up to wave 5 of 3. Yeah, I did want it. Well, the initial target for this would be a break of that previous wave B high, so that'd be about 1705 or something. So wave 5 should break above wave 3. So that can still happen early next week. I would have preferred to see wave 5 push back up towards, that 1850 level. That'd bring us up towards the upper trend channel line there again. That would be a nice close to wave 3. And that's not to say that it won't happen yet. But it looks like, say on the 4-hour chart here, it looks like we're creating a kind of a lower high in momentum here. So we may be running out of steam unless we get some sort of a corrective pattern and then a push higher again, which is also quite possible. So let's break this out into the hourly chart here and see how that's kind of played out. Here we are back at this 1703 was the previous wave. Well, it would kind of the expanded flat high of wave B of 4. So I would like to see a break of that. What did we get to on Friday? We got up to, or sorry, Thursday we got up to 1690, 1689 and change. Yeah, I would really like to see wave 5 push above 1703 at a minimum before turning down again. But I just have to deal with what's here. Of course, we could also be looking at this this previous correction here. This could be a fourth wave at one lower degree. So it may be that what's happening is that we're only closing out wave 3 of 5 here, which is a possibility, especially if we just bounce around correctively and then rally again. That'll probably be more fitting to what's happening. And again, there's other ways you can read this. I've shown another alternate account here where the acceleration of the wave 4 low, that'd be wave 4 in red here, that acceleration completed wave 1 in green of 5, and then the decline off that interim high completed wave 2 in green, and that'd be wave 2 of 5. So you could look at this also as wave 1 of 3 of 5. The only way we're going to figure out what is actually going on here is just to let the market speak for itself. If we get a 3-wave decline back into this previous shoulder here, so back into about 1640 or something, and then we rally again, that might suit this alternate, this more bullish alternate count here, as a 1-2, 1-2 pattern. So that'd be 1-2 of 3. So there is a path to higher prices again, but I'm just kind of holding just that kind of little kind of kernel of doubt in my mind is there, that we are completing wave 1 and we will work on a larger wave 2. So I would say that I will hold the more conservative kind of short-term bearish count as the main count, with the caveat that we're working on a larger bullish pattern still developing. Okay, so that's gold. So next week it looks like we're going to start completing this wave 5 and then turning down into wave A of 2. Okay, let's go again. So crude oil, here's the 4-hour count in crude oil. Wave 4 was always expected. I've had to kind of update this the count that I was working with to show wave 4 in blue. I was working with a lower degree wave 4 here, but it looks like the size and the relative size of the correction is starting to look like a wave 4 in blue. Okay, so here's the hourly count. It looks like we've got a 3-wave pattern, a pretty reasonable 3-wave pattern. My charts are not the derivative that I'm using, US oil here, it's not reflecting, let's say, the price action, the sharp price action that happened on Friday here. So as we actually pushed down below 23.75 on Friday. So I think we've wave 1 down complete, even though it's not showing on my chart here. Wave 1 of 5 is now done, and we'll probably see some sort of a 3-wave correction to a lower high in wave 2 come, let's say, Tuesday evening or so, and then or Monday evening even, and probably towards the end of next week or the middle of next week we'll start pushing down in wave 3, and I think this will be where we will break into the teens again in crude oil. And whoever thought that would happen, raise your hands. I did. I'm raising my hand here, especially when we were way back there up at the previous wave 2 high here, up at the mid 60s. I could not see, I could see headlines all over that we were going right back up to 80, 90, $100 oil, and I was just shaking my head saying we're most likely to see $20 oil rather than $100 oil. And here we are, $20 oil, hey? Okay, so the pattern seems to have closed out a corrective upside, an upside correction, 3-wave upside correction. And now we're working on wave 5 down here. So next week, I want to concentrate on the downside again in wave 5 with a target somewhere in the mid-teens for wave 5 to complete. Okay, so let's get on to the S&P. The S&P is pretty much, if not exactly the same, but a reasonable reflection of the Dow. We've got a 3-wave move up in wave B. We're right back at where I thought a B wave may bring us. So you can see if we put on the Fibonacci retracement there, you would expect a B wave to hit about the 50% retracement level on average. So we've got 27.99. We pushed above that on Friday and then closed slightly below it. So again, just like the Dow, I think we are, if not complete wave B, we're very, very close to completing wave B. And I'll get into the hourly count here and we'll pull that apart. So you can see this A, B, C pattern, which closed out wave B. And you can see here in wave C itself, we've got wave 1, 2, 3, 4, and 5. And wave 5 itself has wave 1, 2, 3, expanded flat wave 4, and then this nice spike higher in wave 5 to complete. And the market closed then on Thursday just in around that 50% retracement level. Of course, everybody and their mother and their dog is looking at the bullish potential here, and here we are, us, contrarian, us idiot contrarians, looking at the, sizable bearish potential here at this time. If wave B is done and we're about to head down into wave C, well then, look out below, because wave C could be a real horrendous affair. If I get this Fibonacci grid out, we can see that if wave C reaches 100% of wave A, which it should, then we will probably hit down around the 1600 area for wave C to complete. So that is 1,000 S&P points, which is a lot of S&P points. Okay, so now we are, let's say we are familiar with the risk at this point in time. So I'm actually showing a 1-2 here, and I shouldn't be. This is wave A, and this is wave B. Okay, so wave C. What to expect in wave C? All right, let's get to the hourly chart here. So we've got wave B, in the ballpark of complete. You can see this previous fourth wave here at one lower degree. That's 28.83. We have the 62% retracement at 29.30, 50% retracement at 27.80. So this range here from 27.80 up to 29.30, it's 130 or 150 S&P points. It's a wide range, but we pipped right into it and we closed off it at the moment. If we push down back below this fourth wave here, this wave A high and wave 4 low, so that gives us kind of a little range between 26.25 and 26.46, so that kind of 20-point range there. If we push down in 5 waves, close below that 26.40 level, I think that would be enough to call wave 1 done, and then we'd look for a lower high in wave 2, which would be the bearish signal that I'm looking for to kick off a larger wave 1 of C. So you can see this be wave 1 down of wave C in brackets, where wave C should take us down in 5 waves. Okay, so next week, I think the S&P should roll over. I think wave B should close out early. If it's not already done, it should be done probably by Tuesday, and we should roll down into, or we should have the initial signal that we are rolling down into wave C by the end of next week. And God help us all when that does come about. Okay. Well, God will always help you, but you don't care too much about the market. I want to just insert a alternate account here, which I've been tracking, and this one has always been in the back of my mind. Okay, so the action in silver was expecting a 5-wave move lower to complete wave 5 of C of B, and if you can show you the weekly count here, and this would be the long-term weekly count here, a large B wave. And what we would be doing now is bottoming in a wave C of that B wave. And wave C should have traced out 5 waves. And this couple of years hiatus here was actually a triangle in wave 4 of C, and then the plunge recently was wave 5 of C. So we have wave 4 complete, that triangle high, and then 1, 2, 3, 4, and possible new low of wave 5 is still on the back burner, or is still the main, let's say, outlook. If we get into the 4-hour chart here, you can see we've got 1, 2, maybe wave 3 low. You see this rally off the low is starting to look more impulsive as the day goes on, or as time goes on. So the test will be, do we get a 3-wave retracement in a possible second wave, or do we continue lower in wave 5 of 5? So either way, I think there's probably more downside to come in silver. Whether that downside will be corrective in wave 2 or impulsive in wave 5 is yet to be discerned, let's say. And like that, again, I am erring on the side of the more bearish count, which would be a decline in wave 5, and with the caveat that we are working on a larger wave 1 up. So let's get this shape. Let's get this alternate count in. If this wave 1 was correct, how would this play out? Well, this could be wave 1, 2, 3, fourth wave, sideways fourth wave correction, and then wave 5, or wave 5 of 1 about to complete. And then we would look for a 3-wave correction, which would probably, the alternate would probably push back down into this previous fourth wave low, so about 1350 area. And then once that would be complete, if we got an alternate wave 2, then we would probably push higher again, back above this key level here, 1638. If 1638 goes, then I'm ready to turn bullish again on silver. And that would be where wave 4 would overlap the low of wave 1. Okay, for the moment, possibility that we have a 5-wave decline to come, or 3 waves down will be the alternate count in wave 2. I'm starting to lose track of my own thoughts here, so I think it's time to end the video. But hey, thanks so much for being with me this week, and until next week, it's looking like it's going to be a pretty serious week ahead, and we will be remaining as vigilant as we can on that front. Okay, have a good week. Have a nice weekend. God bless you all. This is Easter weekend, so celebrations all around, I think. Until Monday, we'll see you then. Back on the website. Have a great weekend. God bless. Bye-bye.